So we will start our session with price action. Basically price action with candle signs. So what is price action? Price action is nothing but movement of price from one PD array to another PD array. So in the market, in any market, it could be a index, it could be cryptocurrency, it could be commodity or any stock. So price is always either seeking liquidity or offering fair value. Now what is liquidity, what is offering fair value means, or what is PD array, we will see in the coming slides. Okay. So PD arrays. What is PD arrays? PD array stands for premium and discount arrays. So what is premium array? Is swing high. What is discount array? Is a swing low. It could be fair value gap. So bullish fair value gap is a premium array. Bearish fair value gap is a discount array. Similarly, it could be previous candle high and low, outer block, breaker block, and mitigation block. So these are the 6 type of PD arrays that we will be using throughout all the videos and as well as this video. Next, the time frames. So we will be using the monthly time frame, weekly time frame, daily time frame, and 4-hour. These 4 time frames will be used mainly for finding out the bias. So when the monthly bias, weekly bias, daily bias, and 4-hour bias are in sync or pointing in the same direction, that is the most probable or highest probability area or time when we can do a trade. If monthly is direction is bullish, weekly is bearish, daily is consolidating, or 4-hour is something else, this is not the right period to take a trade. We should be waiting when all the higher time frames are in sync so that we can enter a trade using lower time frames like 1 hour, 15 minutes, 5 minutes, and 1 minute. We'll see how these time frames help us in finding out the bias and how to enter in coming videos. For now, just understand these are the time frames that we'll be using throughout our series of videos for finding out the bias, taking entries, or understanding the price action. So for price action, we will be using the candle chart, right? In candle chart, there are 2 types of candles that are available, like this, a bearish candle, where price opens at some level, then goes little high, then goes little down, and then closes at some level which is below the open price. So the candle is red, candle is having a high and a low point. Similarly, for bullish scenario, price opens at some level, then goes little bit low, then goes little bit high, and then ultimately closes at some level which is above the open. So the candle color is green and we call it as a bullish candle. Sometimes it is also called as OLHC, and bearish candle is called as OHLC also. That's just a convention for bearish and bullish candles. So let us understand different candles that are available and the PD arrays. Here the first PD array that we saw in the second slide is swing high and swing low. So what is swing high? Swing high is a high which has other high on the left, lower high, and another lower high on the right side. So this one is picking out. Similarly, for a slow, there is a higher low on the left side and higher low on the right side of the low. This is called as a swing low, right? So this swing high, swing low, these are the very important PDRA that we'll be using throughout our video. Next PDRA that we saw is bullish PDRA, fair value gap, and there are two types of fair value gap that in the price section or the charts: bullish fair value gap and bearish fair value. So what is fair value gap? Fair value gap is a imbalance in price, wherein if the price momentum is very high, price is rising very fast. In such case, what happens? The price rises very high and is then creating a gap between these two, this swing high and this swing low. So in fair value gap is a 3 candle pattern, wherein the first candle, it could be anything like a normal candle, it could be red or green, any type of candle. The second candle is always an expansion candle. Expansion candle means it is having a very high body and smaller wicks. And the third candle, it could be anything, consolidation or an expansion. Now based on the third candle, if it is an expansion or a consolidation, we have two type of fair value gaps that we'll see in the next chapter. So here, because of the momentum in price, there is a gap between the first candle's high and third candle's low. So this particular gap that is available here, it creates a fair value. It creates a gap which is called as a fair value gap. This fair value gap is having some unfulfilled orders are pending there because of the high momentum in price. Similarly, we'll have bearish fair value gap, wherein first candle could be anything, second candle will always be an expansion, a bearish expansion candle, wherein close is far below the open of the candle, and third candle could be consolidation or it could be another expansion candle. Okay. So there is a gap between the first candle's low and third candle's high. So this gap is called as a fair value gap. It is a imbalance in prices. Okay. So these are bullish fair value gap and bearish fair value gap. Next, we have a respect candle and disrespect candle. Now what is this respect candle and disrespect candle? So depending on the size of body in relation to the wick, the top wick and the bottom wick, we can distinguish candles in respect candle or disrespect candle. Here in respect candles, when the candle, if bullish candle is there, what happens? The open is there at some level, then price increases or rises to some high level and then ultimately closes below but above the initial open price. So it creates a green candle, a bullish candle, but there is some rejection coming from the top or swing high. Similarly, for the bearish respect candle, price opens at some level, then goes down and again ultimately comes back near to the open price but below the open price. So we have a bearish red candle with a long wick at the bottom. See this long wick at the bottom, or for bearish candle, the bottom candle, and bullish candle, the top wick causes it to be a respect candle. In case of disrespect candle, we have very small wicks at the top and the bottom for bearish as well as bullish candle. So in this disrespect candle, it means they have higher body. It shows a greater momentum, or it can also be called as the expansion candles. Like in fair value gap, the second candle, these are always the disrespect candle, which are having higher body than the wick size that at the top and bottom. So these are the disrespect candles. We'll see how respect candles and disrespect candles are used in price action on the charts at the end of this video. Another PDRA that we see is fair value area. Like in the first section we saw price is always offering, seeking a liquidity or offering a fair value, right? So how they offers a fair value is via the fair value area. So this is the fair value area. This swing high overlapping with the fair value gap is nothing but a fair value area. So this is a bullish fair value area, and in case of bearish fair value swing low overlapping with a bearish fair value gap is called as a bearish fair value area. So here is how the respect candles, fair value area and fair value gap, they all work together. So in this case we have a bullish fair value gap and a swing high overlapping with this fair value gap, so it creates a fair value area. Now when after creation of this fair value gap, the next candle, the fourth candle, what it can do, it can either touch the fair value gap and carry on the expansion or the move in the direction of the momentum price action. In case of bearish value, similarly the fourth candle can continue in the bearish direction or lower direction after touching the fair value gap. So here this fair value gap is being respected. All the pending orders trapped in this fair value gap are being executed, and we continue our journey to the down. So this is the respect candle, which is respecting this fair value gap by just picking into the fair value gap, by wicking into this fair value gap. So we call it as a wicking the fair value gap or fair value area. We'll see what are the differences between fair value gap being respected or fair value area being respected in the next chapter. So sometimes the respect candle can respect the fair value gap, or it might come little lower and respect the fair value area, or in case of bearish scenario this respect candle can come little higher to offer the fair value area and then continue the downward journey. So this fourth candle, you can say, is the respect candle. What it is doing, it is respecting this fair value gap or offering a fair value area by respecting this fair value area in this overlapping swing high or overlapping swing low. This is how the market offers fair value.